StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I was going to wait to do a video until it looked like we were into or about to start the bounce, and it might be a while before that video was to be put out. So I decided, what the heck, we're going to do a quick video here for you guys just to kind of catch you up on where we're at. Listen, the bears are killing it down here. And, you of course reach these extremely oversold levels. And that's really where we're at right now, into some very, very oversold levels. And everybody expects the bounce to come. It'll come now. It'll come on this particular run, or whatever the case is. You can't get ahead of yourself here, guys. One of the biggest mistakes made by young traders is they believe that it's going to happen. They think that it's going to bounce at this point or at that point or whatever. And that's actually, it's really a bad way to trade. You need to know what you're looking at. I mean, if you're getting in long because you see X, Y, and Z and it makes sense, well, that's one thing. But if you're just getting in long because, well, this looks like a good place, you're only fooling yourself. You're going to get yourself in a lot of trouble that way, and you're going to end up burning up your account, and this is going to be a very quick game for you, this whole stock market thing. What you, of course, want to be very careful of in these runs is you have to wait until you absolutely get confirmation that things are going to turn around. There's many different ways to look at that. I can't get into all of them here in this video, but one of the things, of course, that you look at is something called capitulation, where the market runs down, 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 and down, and down, and all of a sudden when it turns and starts to run upwards, it really runs. I mean, it'll run from 30 points down to break even, or up a few points within the matter of an hour or less than an hour. Those type of really, really hard moves don't happen very often, but that's, kind of a sign at that point that maybe we're into the bounce, and you guys can maybe move on with looking for long plays. Keep also in mind that you have time. These bounces don't happen all in 1 hour, and they don't happen all in 1 day. So you have an opportunity to sit, wait it out, be patient, and let the market give you some idea of, okay, I think this is it now. Even if we have a huge run back to the upside on 300-point Dow day or something to that effect, it still will not correct everything that we've been through. We're going to have more days of bullish action. You don't have to call the exact bottom. But if you don't call the exact bottom and you go long anyways, guess what? You could sit through a ton of pain, and that's where a lot of people are at right now. So here's the video. I'll blow through it. I don't have a lot of long and short suggestions for you in this video, only because we are where we're at. We're in a situation where, let me just go ahead and look at the daily here of the Dow. We're in a situation right here where if you go short, you worry that the bounce could happen any second. If you go long, you worry that the bounce isn't here yet. So you put yourself in kind of a conundrum. If you're going to try anything, make sure it's, maybe back above previous levels that were broken. For instance, look at the chart in front of you, and back above the 13,000 mark, which would clear that 200-day moving average, that's probably a pretty good place to dip your toe in the water and see if you can get something to stick. Now, it might go back up there, run above it a little bit, come back down and close below it, whatever the case might be, because it's the 200. But the fact is, those are the type of things you're looking for. If you want to go short, great. Look for breaks below those areas of support you see in front of you, and go ahead and try a little bit of a short. But you have to be managing the trade. Don't look at it as a swing trade necessarily. You have to be very careful at this point. And B, don't be afraid to be greedy. Get what you can, take what you can, and be done with it. You can always get back in if something happens where it goes back up or it goes back down, or whatever the case might be. You can always get back in. That is the beauty of the markets. So, looking at the chart in front of you, I gotta say, yes, we look oversold, but the trend here is good. Will we bounce tomorrow? Yeah, sure, we might have a little bit of a bounce tomorrow. We're at some lower support areas. But overall, I'm definitely not the type of person that just goes ahead and calls it and says, yeah, we're bouncing tomorrow, be ready. It doesn't work that way. That's a really good way to get yourself and other people's money killed. So look at it this way. We're down at a level of support. Is it a good place for a bounce? You bet. Have we been getting crushed the last few days? Yes, we have. So it's not a bad place for the Bulls to maybe try to make a run at least temporarily. What you'll want to watch for coming into Friday is, does it continue all day long, or is any bounce sold into? Every bounce, does it end up back down where it was before? At the end of the day, do we end up lower or back down where we were maybe on the bounce during the course of the day? Those type of things are what I'm really going to be watching for coming into tomorrow's trading. So this is something I would suggest for you as well. Just be very conscious of what's being done on any kind of a bounce. Is it a really hard, strong push, candle after candle after candle? Or is it something where it goes up a couple candles quickly and then wanders around a little bit and doesn't really go anywhere? Listen, that's not true buying from the market. That isn't heavy buying from the market. Don't be fooled by that. So, look for that kind of action coming into tomorrow. Here's the Dow Daily. These are your areas, long and short. Take them at your own risk. Just be very careful. I usually drop my position sizes in these type of instances, and I'm very, very cautious about taking quick profits, setting stops, moving stops, managing the trade once you're in. NASDAQ 60 is really getting killed. Listen, the techs are not playing here. There's absolutely zero interest from the tech side to run up or to buy into this market. Nobody's buying techs. Apple's a perfect example. It's getting absolutely destroyed the last umpteen weeks. 7 weeks or so. Go back and look. 700 to 530. Yeah, that's pretty much destruction of a company that's supposedly everybody's favorite, fundamentally strong, and on and on and on. Yeah, if nobody's buying Apple, there might be something going on with the market. So pay special attention to those type of things. If and when we see a bounce, also on the inverse side of that, look at Apple. Is Apple bouncing? Is it coming back really strong? If it is, good chance that maybe we're going to head upwards for a little while. If it's not and it's floundering around and the market's still moving up, it's hard to get sold on it. Be careful of that. So the Nasdaq, I'm just going to flip to the daily and show you. Look at the red. It's just getting killed. You want Elliott wave? There is none. It just keep counting ones and twos all the way down for right now. There's really no count in here to find. Any count and every count is pretty much correct. So there's really nothing to be done except, once again, good, strong selling pressure and nothing but selling pressure since the end of September and all the way into November now. So maybe next week, options expiration week, the following week coming into Christmas, who knows, but not right now. So be careful. Like I said, look for, certain telltale signs of the bounce, if you will. Down at 1.5%, that's another 40 points after getting destroyed the last couple of days. Gap down, run down, run down. That is heavy selling, guys. Heavy selling. There's no buying going on down here. Nobody's interested in this stuff. Not yet. Not yet. And the trend looks to be pretty strong. So if you want to keep on this thing, great. Find a short entry, stay with it, be greedy, take profits when you can. Sometimes it's very difficult in these moves, but until we get back up in this area here, I'm not interested in any longs. So be very careful with that long stuff. Here we are below the 50-week moving average and continuing to the downside. 1, 2, 3, 4, 5, 6, 7 weeks in a row. Can we finish back up close to the 50-week? I don't know. I don't know if we're getting kind of a bounce. It'd be about a 30-point bounce tomorrow. But overall, we're down already 3% for the week. And take a look at this. This is after numerous weeks of being down, and we're still down 3% for a week, at least at this point. Maybe we bounce 3% tomorrow, we won't. But, if we get a heavy bounce tomorrow, okay, well, that might fix things a little bit. But overall, if we stay down in this area or drop even further, there's something very broken with the market. Very broken with the market. Okay, SPX 60-minute also in the same free fall that you see here, breaking out of channel lines that we had set up, break and hold and hold and hold, and finally coming down. Look, we broke and closed below the 200-day moving average. Very, very bearish right now. I'll give the bulls a day to get it back above that level, but right now, very bearish. Very hard to get bullish in this area down here. So don't be guessing. Wait for your entries. Drops back below here, great. Seems the bears have the momentum. You can continue to go short. Certainly nothing wrong with that, but be greedy. Here's the VIX. Here was the caveat. What am I noticing about the VIX? It was down. If you've watched my videos for any particular time, usually markets down, VIX up, so on and so forth. Not today. This was odd. Now the VXX, I don't know if you guys follow that, but that one was up. That was, so that one kind of kept the course. But the VIX itself, markets got crushed today, and so did the VIX. That's a divergence. Now, one day I don't make a big deal of it, but if this continues on, this could be a precursor to maybe signaling some sort of a bounce or some sort of a run back up in the markets, whatever the case might be. But notice that the VIX stayed comfortably between the 15 and the 20 mark. I don't really start to get panicked. I don't ever get panicked necessarily, but I don't start to get worried about the markets being panicked. How about that? Until the VIX gets back above 20. 15 to 20 is kind of a complacency zone for me, and it's remaining and staying very firmly within the complacency zone. Even after a week, it's up 5%, so that's good. I mean, it's showing that, markets down, VIX up, so on and so forth, but still firmly tucked right in between the 15 and 20 mark. There isn't a ton of fear. This is fear. Back up here. This is fear. It hasn't hit us yet. Not yet. So we'll see if we get some movement out of this tomorrow. But once again, just be conscious of the fact that the VIX was down and the markets were also down today. It's a divergence. FAS and FAZ I cover in my videos, but really I'm going to make this short and sweet. Once we broke this triangle, I told you these were your marks to the upside, to the downside, and once they broke it, look at that. That was money. Money. So back below this 107.60, 50 area, right in through here, if you took that short entry, it's been paying off for you. That was like a $6 trade or something at this point, and there's might be more to go. From a daily perspective, we keep dropping and losing these lower lines of support. So you know what? Back below 100, not a bad place to be looking at a short. Ultimately, could get down into the 200-day moving average. Might chop for a while. You could look at this as a potential head and shoulders that's now been busted. If that's the case, it's down. It's down. Whatever. The target's low. Just keep in mind that the 200 should be very strong support if and when we get down there. So back below 100, that'll be your first opportunity to look at this thing, I think, to the short side again. Long, I don't even have a long. I don't even have a suggestion for a long at this point. Everything's in such disarray that I don't want to just stick my neck out there and say, yeah, go here, try that. It isn't going to work that way. FAZ up very nicely today as well. Once again, on the break of this triangle, back above this 1750-ish level, paid off very, very nicely. So up almost $1 since that point on a $17 stock. Not too bad. Back above the 50. Also getting close to the upper area here around 18, 19. So back above 19 will be your next spot if you want to go long. And I'm telling you, this trend continues. This thing's going to be doing this for a while, and you need to stay with it. Okay, if you get in and you get long and you find that it's working in your favor, manage it, move stops, so on and so forth. But I'm telling you, you could stay in this thing for a while. You could potentially swing trade this for a while. I would love to actually see a pullback in through here and then a move up and above 19. That would even make it more cherry. I don't know if I'll get that lucky, but if you can get that kind of a move here in FAZ or FAS, whichever one you want to play, well worth the take. Well worth the take. All right, there's the video, guys. I'll leave you with that. Really, the video was done more for educational purposes and for informational purposes, as opposed to go long, go short here, that type of stuff. If you want more information on that, I only do like one of these a week, so if you want more information on that type of information, if you want that kind of detail, that is, if you want that kind of detail, then subscribe to my video newsletter. I do a newsletter, a video, basically. I do a video every day except for Saturday, so you can log in every day or whenever you want to and see the video, see where I'm at for that day, what I think's going on, where I think I see things going next. I give entries and exits and, hey manager, put your stop here, and I'm pretty exact in my videos when it comes to that kind of stuff. I give stock picks, I go over the Russells, a lot more lines, a lot more channels to look at, just a lot more in-depth information because I do one every day, and they're about 15 to 20 minutes in length. So it gives me a lot more time to deal with this kind of stuff. It's $28 a month, guys. It's like $1 a day. So anyway, it's really, really inexpensive for all the information that you get. The other product I have is the mentoring. If you guys want to learn how to do this for yourself, write me, send me an email, and ask me about the mentoring course. I'll send you more information on it. We'll find out if it's for you. And if you're interested in it, we'll get started with it. But that's really kind of the college level course where you and I work one-on-one. I have a set of basically slides or basically a group of information that we go over. It's not just about, hey, look at this chart, what do you see type stuff. It's a lot more in depth than that. It's basically like a school course. I always call it a college course, but it's like a school course. Anybody can understand it. You could have trade you could trade for 40 years and get information out of it. You could trade for 40 hours and get information out of it. It doesn't make a difference. It's custom built for everybody. So send me an email about that. I'll send you more information on that. Otherwise, just be careful. Don't get too bullish yet. Of course, I'll say that and things will bounce 1,000 points tomorrow. But the truth is, be careful with this whole bear run. We're never we're never down too far. That doesn't exist. Okay, that's we're never up too far in the markets. We're never down too far in the market. That's not even a real term. Okay, amateur traders think that way, but the professional traders know that there is no such thing. Go back to 2008 and you tell me, looking at the chart, when we were down too far. Go bar by bar, starting like September of '07, and start on a weekly chart and tell me when you think we were down too far and we were going to bounce, and then see what the next bar looks like. More likely it's red. So you never know what you're going to get out of this thing. You just wait and see. Just be careful. Be careful with your money. Okay, guys, I'll leave you with that, and we'll see you again in the next video. Bye.